We are back on MorningLine. Thanks for joining us. Dr. Friday's with us taking your calls about taxes, 737-7587. And you know, as she said, you can talk about it year-round because there have been changes.
Well, and the thing is, if you don't start making the changes today and start thinking about what has happened this year, not even just in the tax code, but in your life, maybe you've gotten divorced, maybe you've gotten married, maybe you've had a baby. These all have huge effects sometimes on your taxes. We're halfway through the year. Anything you do, maybe you've been claiming married in 3 because last year or this year in January you got divorced. Well, divorce happens for the whole year. It's not like the first part of the year I'm married and the second part of the year. So now you've divorced and you've been claiming married in 3, and guess what? You're single in 0. You're going to have a huge tax bill on your table, right? So you need to then now double up on withholdings, change it to 0, single in 0, and start having a lot more come out to offset the end of the year. Otherwise, you're going to have the world's worst loan officer, the IRS.
It sucks when you get caught off guard. But so many people do. Or they don't either don't think about it.
I stay in business because of that.
It's real easy to put it off. You know, my wife's a freelancer, and so we try to pay quarterly every time. And we do that, and we try to put as much as we can at that one time. We always wish we put in more, but there was times a while back where sometimes we'd forget about it, and then you just get nailed at the end.
Then you get penalized as well for not paying proper quarterlies.
It is no fun. Hey, listen, Amanda, who had the medical question, has a follow-up, so let's take her. Amanda, go ahead.
Yes. In addition to the medical, the ADA service animal dogs and their care and upkeep, from what I understood, last year you were able to deduct all of those expenses. They had to be itemized separately within your medical, but is that still going to be allowed this year?
Absolutely, absolutely, yes. All the care, any licensing, any veterinarian bills, food bills, I mean, those are a medical piece of equipment in essence. So yes, everything it takes to maintain that wonderful beastie, you're in good shape.
Okay, thank you very much.
Yeah, thank you.
It's a great question.
As far as medical exemptions, what is exempt from your medical bills, basically?
Pretty much anything you've had to pay. Or, let's say you had to buy a vehicle because you needed it because you're disabled and you need to be able to use it.
What about like co-pays when you're at the doctor?
Oh, those, yes, absolutely, co-pays. But in most cases, if you make $100,000 and you haven't spent $10,000 on co-pays, you're not going to itemize, right? You lose that first 10%. So unfortunately, medical is another one of those that if there's a way of pushing it into every other year, it's not an easy thing because hospitals are funny about being paid as soon as you walk in the door. But if there's a way of making more payments in 1 year or scheduling more of your medical in 1 year than another, I mean, sometimes it takes a little maneuvering to accomplish what you want to do.
A lot of people have health savings plans through their work.
I love HSAs.
Okay. Yeah,
I have one.
Oh, do you have one?
Yes.
And again, we have one here at the station as well, and I use that where, money's taken out. It's, I think, is it pre-tax dollars, and then you can use that card pre-taxed to pay for, and it accumulates.
So what is it we love about those words? Pre-tax.
Pre-tax. Yeah, I mean, you're not paying any tax on it at that point, and it goes in. And the beauty of it is these days, unfortunately, so many places have high premiums as insurance rates go up and up. You can go with a higher deductible, recognizing you have the health savings plan to cover whatever that deductible is. Right.
And there's one more step. Say every year, I think it's like $4,500 or $3,500 I can put into my HSA as a single person. Every year I can put into that, and let's say I don't use any of that money. At the end, when I hit 70 and a half, that's basically another IRA.
Is that right? So if it accumulates over time, now you don't lose it. It goes from year to year to year.
You don't pay tax on it until you hit full retirement. At that point, if you haven't used it, they consider now it's part of your required minimum distribution.
But you wouldn't let it continue to grow until you're 70. I mean,
why not? Unless you have medical purposes. Well, I haven't had any medical emergencies.
But you choose to put a percentage of your paycheck into that.
Right.
Okay, so if all of a sudden, I don't have this, but if all of a sudden my HSA got to $30,000, and I have insurance, and that more than covers whatever deductible I have, I'm going to stop putting it in.
Because you can only maximize your retirement to a certain dollar amount, right? But now I've got another $3,500 I can put towards retirement tax deferred. So it's a way of maximizing my SEP in my case, and my retirement into things. So now over there I'll have another $40,000, $50,000 that's just extra. extra.
I didn't know about that. That's very interesting.
Playing the game. I love it.
That is interesting to think about. You could create that. I guess your plans vary. I guess I need to check and see what the one is here with our station.
Right. As far as I know,
pretty much typical
as
with
far
those
as you can only put so much per year in.
Yes, that's right.
But other than that, there's no amount how much you can put in.
And as it accumulates, and you can just leave it there, even after I've left Channel 5, perhaps.
Right. Well, then you have to still maintain. I mean, you may go on to Medicare, and you can still, my understanding, now I'm not an insurance expert, but this is my plan, I'm hoping I'm right. Even if I'm on Medicare, I can use my HSA to pay medical when I get older. So I would still have money sitting in a fund that would still be deferred, because I don't want to itemize medical deductions. Because just now, if I had $35,000 as this couple that called earlier, this doesn't come into play necessarily, because sometimes some of those expenses may not be fully deductible. So, you know, I mean, you don't always have full control, right? But that's the way to play the game.
I know you're not. I'll have to ask the investment people, because that almost makes me think, should I put a little bit less into my station's 401k and increase the amount I put into my HSA with that thinking?
They would probably say no, because they want you to maximize your 401k first, just because supposedly it will, normally your HSA is not vested. I mean, it's not there to grow money, really. I mean, it's not really invested very well necessarily. I mean, I've never, you don't lose money because your 401k can go up or down. HSA doesn't, right? You don't lose money, but it doesn't really grow either. It won't
grow as much.
Right. So they're going to, you know, it's more of a savings account is the way I look at it, just as a savings. But when you talk to most financial planners, what's the biggest things they say we're going to hit when we hit retirement? Medical costs.
Yes. Oh, of course.
So that's my thought is, hey, if I've got 20 years of putting $3,500 into an HSA, and I don't use much of it, knock on wood, but yet when I hit a certain age, I will need it. I will then have that in addition to Medicare and other things I've put into play. So
excellent thought.
I'm hoping. I mean, I have no idea.
Oh, you're right.
It's a game.
What a great thought. That's awesome. And by the way, is there anything else changed in the code with regard to like Roth IRAs or any other investments that people need to be aware of? Should they choose to? I know that in some cases you can draw on. In fact, I drew recently. I needed a little extra money for something we were doing. I was able to take out tax-free and without any penalty from my Roth. I think it was based on
5 years or 59 and a half, whichever is longer, and then you can take the principal portion of the money out, because you already paid tax on that money that went in. So you could take it out and then put it in. Right.
Okay, and that came in handy, but have any of those rules changed with regard to doing those types of things?
I'm not a financial planner, but I do know one. If it used to be where somebody would do a conversion and then afterwards call their accountant and find out, you know what, you're going to pay a lot of money on these taxes, so let's turn around and reconvert that back. I don't believe you're able to do that any longer. You can't reverse or, you know, a conversion. So just if you're deciding on doing anything with your retirement account, my suggestion is always talk to two people. One, your financial person, your other, your tax person, because sometimes the suggestions, the financial person may be looking at what's best to grow your money. But if that person isn't really up with the tax laws, they may have just convert that you're growing your money into tax dollars and give it to Uncle Sam. So that can be very painful.
Run it by both of us.
Yes.
Good point. All right, let's go to, we got Nick. Good morning, Nick.
Good morning, sir. I'm retired a couple years ago, and I was wondering how the new tax laws are going to affect me, if at all. What I'm expected to do about filing. I've been filing like 1040 Easy or 1040A.
So when you say you're retired, do you have pensions?
No, I'm literally only living on my Social Security every year.
Okay, so I will tell you, if you're living solely on Social Security, are you married with someone that works?
No, I'm married with somebody who's also retired. She'll turn 66 later this year. I'm 68 right now.
Okay, and does she work? I mean, does she receive a pension or anything?
No, she just receives
Social Security?
A portion of my Social Security.
Okay, you guys do not need to file, and you probably have figured that out because every time you file the taxes, it shows zeros. Because the Social Security itself only becomes taxable when you have other income. Social Security in itself is not taxable.
Okay, I've been worried about that, about not filing anything because there might be some penalty involved or something.
I have clients all the time because you were well trained for the last 40 years. You filed taxes and you never not filed, and now I'm telling you not to file. But seriously, you do not need to file. But you can still continue, and the new tax law will have a zero effect on you. But if you're comfortable, I have clients that still come in today every year, and every year I tell them the same story. Every year they walk out and they still want to mail in a return. That's fine. There's nothing against it. It's just not necessary.
Okay, one last question then. So if I was to come into some income, then I would file that particular year. Is that correct?
Correct. You would file that particular year. You may still see it zero because you've got that $24,000, and if you guys are both over the age of 65, that jumps up by another $1,250 each. So, you know, you got like $26,000 you can earn before there'll be any taxes unless it's self-employed income.
Okay, and I don't have to let the IRS know that I'm not filing then.
There's nothing to let them know. They know because your SS is turned into them, any W-2s is turned into them, any 1099s. That's why it's kind of funny when people think they're hiding from the IRS. Unless you are totally living off the grid, there's no real hiding.
I appreciate your help. Thank you.
Thanks.
Thank you, Nick, for your call.
That's a great call because a lot of people are in his shoes. I do have probably 6, 7 clients I've done, again, for the last 20 years, and they've hit a point where they're in a non-taxable situation. Every year they still want to walk in, they still want to prepare, and they still want to mail out that return because it's what they were told to do.
It's what they've always done. Is there any, not that it's required and there's no punishment if you don't, but is there any possible advantage to doing that? I mean, anything with that? Someone, I thought I remembered some connection about even when you no longer have to file, if you at least file anyway, it can help you somehow with Medicare or something like that.
To my knowledge, no. I mean, it does help. I mean, if you pass away and you've got all your current taxes, getting a tax return filed or whatever sometimes can make the estate be simpler. There are, I mean, if you're working and you're putting money into a retirement of some sort, a savers, maybe a Roth, because if you're working, you can still contribute after 70 into a Roth. You can have a savers credit, but all that requires those kind of moving parts, working and then that kind of thing versus not working at all.
But other than that, nope.
There's no reason.
All right, I just want to see, you've got a couple of IRS alerts there or whatever. Was there anything that we didn't touch on with regard to credits, deductions, tax reform?
I think we want to talk a little bit about beware.
Beware.
Because people over the age of 50-ish are often victims of crimes. Every 2 or 3 days, I get a call from a client. They've received a phone call from the IRS saying that they are going to be sending out the police. They're going to get arrested. I
got one of those calls.
So did I, actually. It was funny. But it's funny because I knew I didn't owe it. It's not funny if you are a person that maybe isn't sure, maybe I did make a mistake, I filed my own taxes, and maybe the IRS, now they're calling me telling me I made a mistake and I need to pay this money.
They prey on those fears.
Exactly.
They prey on those fears.
And so just beware. The IRS, never will call you unless they have already communicated with you through paper, meaning you've gotten the love letters that says intent to levy, we need more information, whatever, we've changed your tax return. And it would be a local phone number. Almost everybody nowadays has a phone that gives the phone number, either it says unknown. Again, there's nothing illegal about hanging up on the IRS. Even if it's the real IRS. But hang up, call the local number, call the 800 number.
At least check
Always check, and if you're afraid, call someone like me or someone else that then can get representation, and if you have an issue, let's get that resolved. I can almost 99% guarantee, unless it's a local agent calling you, that those are scams. There's also letter scams coming out. So again, I'm telling you, wait, the IRS is going to mail you something, and now you're sitting there with a letter that says from the Internal Revenue Service, you need to pay this money, and then it's got an address in Utah or Cincinnati, which is the cities in which a lot of times we send money. If you don't know about any issues, or you didn't do anything to kind of trigger knowing about this, don't just pay a bill because it's there and you're thinking, I'm going to get the IRS off my back, it's only a couple $100. It's not a big deal. No, it is, because think about it. They get 10,000 people all paying a couple $100. Now you've got a pretty good little whirlwind.
The reason it's out there and they call everyone, including you and I, is because it works. And so the bottom line is against it all is if anyone's asking you for money, whether it's IRS or anything else, just assume it's a scam and double check it. Maybe it's not, but double check. Not with them. Hang up, call who you think they're representing, and find out. If it's money, don't send it out, and never give out your credit card number. Period. Over the phone. I don't care.
Social Security,
who it is. I don't care if they say it's the sheriff. Sheriff's calling a lot of people too. Bogus sheriffs. Real quick, Tony, go ahead, Tony.
Yes, I want to ask Nick. Thank you for taking the call.
Yeah, sure, buddy.
When I was in trouble with the IRS, every time I worked 2 jobs, I got fines because I'm separate, single father going through divorce. I got fined. I could never get called up because the penalty was eating up the money I was sending in. So now I'm trying to see why she don't recommend to her agency, because I know she's a fine lady. I talked to her for years. if you got to pay back child support, why don't they take that time that you owe for IRS and add that to it, and that would cut down your back child support? IRS don't really need the money. I mean, I would rather them have it.
Tony, I'm with you. We only have about 30 seconds.
Okay.
So.
Well, the answer is that's not the way the code works, unfortunately. So if you owe the IRS and you set up a payment plan and you're paying back child support, it is deductible in the amount you have to pay the IRS as far as payments, but it's not the other way. As far as I understand, I don't do law, but my understanding is back IRS debt is nothing to do with how they calculate child support.
Gotcha. Tony, thank you.
Thank you
very much. He said nice things about you. Tony's, that's high praise from Tony. Tony's a tough customer, but he's a good guy. Hey, listen, Doc Friday, thank you. We've got a special guest coming on to wrap up the show on an event going on this weekend, but thanks for coming on. I learned a ton from you today.
Well, good. See, it's fun to talk taxes in June, July.
At first they said she's coming on, and I said, really? I said, yeah, it's good stuff. Thank you again.
No problem.
We'll see you soon.
Thanks.
Take a break. Be back with a special guest right after this.
All right, guys.